Subtitle: Wall Street Shock. Why the stock market suddenly rebounded. Dow, S&P 500 and Nasdaq explained. What a difference a few days can make. After weeks of uncertainty, fears of geopolitical tensions, and worries about inflation, Wall Street suddenly came roaring back. The Dow Jones surged. The S&P 500 rallied. And the tech-heavy Nasdaq led the charge. Investors who were preparing for another difficult week witnessed one of the strongest rebounds in recent months. But the big question is, what exactly happened? Why did stocks suddenly jump? And more importantly, can this rally continue, or is another major correction waiting around the corner? Today, we're breaking down everything happening in the U.S. stock market and what investors around the world need to know. Part 1. The market comeback 0:40 to 2 o'clock. Monday began with an unexpected wave of optimism across Wall Street. Major indices moved sharply higher as investors reacted positively to improving geopolitical conditions and hopes that inflation pressures may ease. The market's three biggest indicators all posted strong gains. The Dow Jones Industrial Average climbed sharply. The S&P 500 advanced significantly. The Nasdaq Composite outperformed, powered by technology stocks. This sudden surge surprised many analysts because just days earlier investors were worried about rising oil prices and instability in the Middle East. Instead of panic, markets witnessed renewed confidence. And one major reason behind this optimism involved energy prices. Oil prices dropped dramatically after reports suggested improving relations between the United States and Iran and hopes for smoother global energy supply routes. Lower oil prices are extremely important because they can help reduce inflation, ease costs for businesses, and potentially give consumers more spending power. That's exactly the kind of environment investors love. Part 2. Why oil prices matter. 2 to 4 o'clock. Many people wonder, why does oil affect the stock market so much? The answer is simple. Oil is connected to almost everything. Transportation, manufacturing, airlines, shipping, food prices. When oil becomes expensive, companies face higher costs, and consumers spend more money on essentials. That usually hurts corporate profits. But when oil prices fall, businesses can save billions of dollars. According to reports, Brent crude prices dropped significantly, while U.S. crude also moved lower after hopes emerged that disruptions in key shipping routes could ease. Investors quickly interpreted this as good news for inflation. And lower inflation could eventually mean lower interest rates. Which brings us to another critical factor driving markets. The Federal Reserve. Part 3. All eyes on the Federal Reserve. 4 to 6 o'clock. Even though stocks rallied, investors are still paying close attention to the Federal Reserve. Interest rates remain one of the biggest forces influencing markets.
When rates are high, borrowing becomes more expensive. Businesses slow investments. Consumers spend less. But if inflation continues cooling, the Fed could eventually have room to become more accommodative. That's why every economic report and every Fed meeting carries enormous importance. Markets are constantly trying to predict. Will the Fed cut rates? Will rates stay higher for longer? Or could inflation surprise everyone again? Analysts believe expectations surrounding upcoming Federal Reserve decisions are playing a major role in recent market movements. Part 4. Tech stocks are dominating again, 6 to 8:30. One sector clearly stood out during the rally. Technology. The Nasdaq outperformed other major indexes, showing once again that investors are still heavily betting on innovation and artificial intelligence. Several semiconductor and AI-related companies helped fuel gains. Companies linked to artificial intelligence, cloud computing, and advanced chips continued attracting investor attention. Technology stocks have become the driving force behind much of the market's growth over the past several years. And despite concerns about valuations, investors remain enthusiastic. The AI revolution continues to be one of the biggest themes on Wall Street. From data centers to robotics to autonomous systems, investors believe artificial intelligence could transform entire industries. And that optimism continues to support tech stocks. Part 5, the rally is expanding, 8:30 to 10:30. Interestingly, this latest rally wasn't just about big tech. Signs are emerging that gains are spreading into other sectors. Bank stocks have been performing strongly, with some reaching record territory.
Several uncertainties remain. Inflation. Prices have cooled, but inflation remains a concern. Interest rates. The Federal Reserve still has difficult decisions ahead. Geopolitical tensions. Peace agreements and ceasefires can change quickly. Analysts warn that long-term stability is not guaranteed, and energy markets could remain vulnerable. Market valuations. Many technology companies are trading near historically high valuations. If earnings disappoint, stocks could experience renewed volatility. Part 8, What investors should watch next, 1430 to 1600 hours. Over the next several weeks, Wall Street will focus on Federal Reserve meetings, inflation reports, employment data, corporate earnings, oil prices, geopolitical developments. These factors will likely determine whether this rally continues or fades. Investors know one thing. Markets can change direction very quickly. And that's why risk management remains essential. Conclusion, 16 to 1700 hours. For now, optimism has returned to Wall Street. Falling oil prices. Improving geopolitical conditions. Strong technology stocks. And hopes surrounding future Federal Reserve decisions have all combined to create a powerful rebound. But history shows that markets rarely move in straight lines. There will always be volatility. There will always be uncertainty. And there will always be surprises. The real question is, are we witnessing the beginning of another major bull market? Or is this simply a temporary rally before the next big challenge? Only time will tell. Outro. If you enjoyed this breakdown of the US stock market, don't forget to like the video, subscribe to the channel, and turn on notifications because we'll continue bringing you the latest updates from